And if you're a student, you have probably heard of student loans. It's a way to help you pay for your education. But of course, there's many questions around the topic. And today here we have Daniel Yarritu from the University of Texas at Brownsville to break it all down and explain a little bit about student loans. Daniel, thank you so much for joining us and welcome this morning. Daniel, we talked a little bit about financial aid earlier, but student loans, tell me the difference between financial aid and loans.
Well, loans are part of the financial aid package. You need to fill out a FAFSA to be considered for student loans. The difference between what is called financial aid by most of our students is that they refer usually to the Pell Grant, which is the free money. Loans, on the other hand, those are funds that they need to pay back. We have different types of loans. We have subsidized loans and unsubsidized loans. The difference is the first ones are based on need. The other ones, any student can apply for those.
Free money, that sounds great. What's the threshold, if there is a threshold, for students to qualify for these free money loans, or what do they need to do to qualify or maybe obtain some of the other loans?
Like I said, depending on the information they provide on the FAFSA, they will receive a number from the government that it's called EFC, or Expected Family Contribution. The lower the number is, the higher their need. If they have a high need, it means that they will be able to qualify for these subsidized loans in which they don't have to pay the interest until they graduate. If they don't have need, if their EFC is very high, then they only qualify for the unsubsidized loan and they have to pay the interest even though they're in college.
And Daniel, it can be very expensive to go to college, so are there other type of loans out there for students besides the government loans, or is that pretty much it?
At UTB, that's pretty much it. The only other type of loan that it's offered is the Parent Plus loan for those students who fall under a category that is called dependent. Those students who are under the age of 24, who are not married and don't have any children, that may need additional funds. They may be able to access these Parent Plus loans.
And that means their parents can apply for a loan?
Yes, it means the parents apply for a loan. Those are based on credit. Student loans, on the other hand, the regular student loan, those are not based on credit.
And of course, loans, some you'll have to pay back, some not, and we don't want students to get in trouble. So any advice as to, what they can do now to avoid getting in financial trouble for the future?
Well, stay on top of their finances. Make sure that they know how much they will have to pay. Usually they get a 6-month grace period once they graduate to start paying back those loans. So they will receive notice on the mail, and they should make arrangements if they're not able to pay at that time.
So the money's out there, and they just got to be responsible, right? And if they really want to go to college, they can make it happen. Yeah. Victoria, what do you have going on your end? Thank you so much, Danielle. I appreciate it.